It's just a dead cat bounce off of a bad 2022, or is there something going on here where people see improving fundamentals?
There's a few factors at play. First, I would start with the year we were lapping Omicron from last year, which was going to be a known tailwind coming into the year. But favorable weather really kicked things off nicely into January and, frankly, across the U.S. for much of February as well. So I think that was a boon to the restaurant industry, helped quite a bit. On top of that, you have fairly high levels of pricing across the space that's helping quite a bit. But I think taking a step back, too, and thinking about what's happening from a macro perspective, we've seen historically around times of consumer duress, particularly during recessions, where there's been a fairly powerful wallet share shift between durables and services, specifically restaurants. And what we've noted historically in the past 5 recessions in the U.S., there's been about a 200 basis point or so average share shift between durables and restaurants to the benefit of restaurants. And so that might be taking place as well right now. Not certain, but what we have seen is that the industry's done quite well to start 2023. And we don't necessarily see reason for that to let up anytime soon.
Sure.
I mean, comparisons get slightly more challenging going into the back half of the year, but there's no red flags popping up immediately suggesting that this is going to slow down.
I mean, just to rattle off some of the highlights, we've got McDonald's up 9% in a month, Red Robin up 38% in a month. It's almost doubled in the past 3 months. Domino's up 11% in a month. Texas Roadhouse has doubled in a month. Restaurant Brands up 10%. Chipotle up 10%. Jack in the Box. You know, on the one hand, a moment ago, we were talking about more signs of a downturn and how card spending is showing pressure for the month of March. And on the other hand, we're talking about restaurants of all things with higher prices and is a super discretionary purchase. I mean, why is this area, or is it just the big chains holding up? It just seems like this is flying in the face of other evidence we're getting, and maybe we'll see with the retail sales report tomorrow.
Yeah, look, it goes back to that wallet share shift. I think consumers or jobs are the most important thing, right?
Yeah.
And ultimately, jobs have been hanging in there relatively well. Wages have continued to grow. And that if consumers have kind of tapped out on spending on durables, simply put, the idea of maybe upgrading something in your home, you've already either done that during COVID, or maybe you're starting to look at the environment and saying, I don't necessarily need to do that right now, something that's a big ticket item. However, I still have some money in my pocket. I still am getting an income because I have a job.
True.
I'm going to go out and treat myself to a restaurant visit, whether that's your quick service operator or your sit down restaurant.